How's it going, everybody, and welcome back to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we're going over our number one buy and number one sell setup of the day. But before we get into those buy and sell setups, we're going to take a look at three different things here today. Normally, when we do one of these, we take a look at COT data and retail positioning. Now, COT data only comes out once a week, and we did one of these videos on Wednesday. So if you want an update to COT data, you can go check out Wednesday's video. And yeah, we went over COT data in detail in Wednesday's video. But today, we're going to go back over retail positioning because you can actually see up here, our retail sentiment is getting updated every 30 minutes. That doesn't mean that retail sentiment is always changing every 30 minutes, but it has certainly changed from Wednesday to today. So we'll go ahead and go over that. And we're going to go over AAII investor sentiment and the put call ratio. And in fact, I want to start with these two, then we'll finish it off with retail positioning before we head back on into top setups to do our number one buy and number one sell. So let's open up the AAII investor sentiment survey. If you are unfamiliar with what this is, the American Association of Individual Investors surveys a number of individual investors and asks where they think the market will go in the next 6 months. And this survey is taken every 7 days. So basically, this American Association of Individual Investors, they ask other big time investors every single week if they are bullish, neutral, or bearish on the market as a whole. We're talking S&P 500, NASDAQ, US 30, things like that. Do they forecast it going up or do they forecast it going down? And we can see that on a week by week basis. In our most recent week here, June 3rd to June 9th, we have seen a bit of a dip from just a few weeks ago. So here, May 20th to May 26th, clearly they were bullish on market sentiment. We can see that overall 47% of investors were bullish, where just 26.3% were bearish, and you can see that difference there at 20.7. That's the most important number that you want to take a look at. When you subtract the bearish amount from the bullish amount, what's the difference between those two? How bullish are they really? When you're factoring in how many people are bearish as well. You can see that each week since then, last week and now again this week, it has continued to dip. And what that tells me is they are losing their bullish sentiment on the market. Now, they are still favored bullish overall, but just by a little amount. You can see that right now, only 39% of investors are bullish on the market, whereas 32% are bearish, leaving you just that difference of 7%. So over the last 3 weeks, investors are growing less bullish on the market, but are still a little bit more bullish than they are bearish. Now let's check out the put call ratio, because this is something very similar. The put call ratio is basically if investors want to place puts or calls. Puts are bearish bets and calls are bullish bets on the stock market. So if there are a lot more calls, then investors are more bullish. But if there's a lot more puts, then investors are more bearish. And if we take a look at the end of the chart here, we can see that pretty much from the middle of May to the end of May, you can see that this white line here was hanging out in this blue section a whole lot. That means that they were bullish for a fair amount of time. You can actually go day by day here, but recently at the very end of May and then into the beginning of June, it's not quite as bullish as it was a few weeks ago. And in fact, today we're practically sitting right on that neutral line. So again, this tells me that investors who were bullish on the market in this area here have slowly begun losing that faith in the market. And right now, today, June 7th, they are just pretty much neutral on market sentiment. So right now, it seems like people are losing their faith in the market in at least the short term. But let's go ahead and finish up with retail positioning really quickly. We'll look at major currency pairs first. And here we go. So right now, retail traders are long things like USD CHF and Aussie USD, both over 60% long there, and that is a bearish indicator for us. Where on the other hand, they are shorting things like USD JPY and USD CAD, both over 60% here. We actually have 61 on USD JPY, and 73% of retail traders right now are shorting USD CAD. That is a bullish indicator for us. Let's check out indices, and we'll throw in metals and commodities in there with them. And wow, they are long a lot of this stuff. So they are long the Nikkei, gold, the Russell, the US 30, silver, copper, iron, oil, and platinum. They are all over 60% long on all of those assets. That means that is a bearish indicator for us, whereas they are shorting the NASDAQ, the UK 100, and they're shorting the S&P 500 right now. Those are actually bullish indicators for us. Now, I should say that just because retail sentiment is really long, say something like oil or gold in this case, that doesn't mean that, you know, necessarily it's just straight up bearish just because they're long. It's just that more often than not, retail traders tend to lose money in the market. So whatever the overall majority, whatever the crowd is doing, typically we want to shy away from, but that doesn't mean that they're wrong every single time. Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today. Let's go back on into top setups. I'm going to remove any neutral biases that we may have and just leave us with our bullish, bearish, very bullish, and very bearish biases. So a little bit shorter list than we had on Wednesday, but still a pretty decent list here. We have 3 very bearish biases in CAD CHF, NZD CHF, and USD CHF. I'm actually seeing a ton of Swiss franc pairs here, and even CHF JPY with a score of +8 here. So all of our Swiss franc pairs either showing up on bullish or bearish setups today. And in fact, technically the 10-year bond yield is the most bullish asset, but I typically like to stick to currency pairs when doing these videos, or you know, maybe gold sometimes. So I'm probably not going to go over yields, but I will go over CHF JPY as our most bullish currency pair with the score of +8. And on the other hand, USD CHF is the most bearish right here, very bearish with a score of -10. And why don't we go ahead and start off with a US dollar pair, USD CHF. We're going to head into data scanners, Forex here, and USD CHF is at the very bottom. And there we go. So USD CHF, very bearish by a score of -10. COT data right now is a score of 0, and retail sentiment a score of -1. We can take a look at those numbers right over here. Right now, institutional traders are pretty much 50-50 on the dollar. It's really not leaning too far one way or the other. 53.98% long, 46.02% short. But the Swiss franc, on the other hand, institutional traders are very short right now, the Swiss franc at 85.63%. However, both weekly changes, meaning did they add more longs or add more shorts? What was the overall change in sentiment on USD CHF, or the USD rather, and the Swiss franc from last week to this week? Well, both of them had positive changes going into this week. So that's playing into this 0 or neutral score here. Retail sentiment, though, on the other hand, the majority of retail traders are long right now, USD CHF. That's giving us our -1 score there. Seasonality is also a score of -1, and we can see that historically speaking, over the last 10 years, USD CHF does typically trade lower in the month of June. The trend reading right now is a score of -2, and to get a better look at that, let's go on into price forecast so we can actually take a look at the daily chart for USD CHF. And yeah, so we can see that pretty much ever since the end of May 23rd, but really more like May 27th, this thing has been in a pretty sharp downtrend basically just moving lower just about every single day. Yesterday to today, it has moved a little bit lower, and price forecast predicts that that is going to continue to be the case. So strong downward trend right now for USD CHF. We can finish up with our fundamental data here. We've actually made some changes to the way that we display our fundamental data that I'll get into in just a second. But first, I want to list off these scores right here. We have inflation and employment change with 0 or neutral scores, interest rates and unemployment rate, both with scores of -1, GDP, manufacturing, PMI, and retail sales, scores of -2, and then our one lone blue box here, services PMI, with a score of +2. So if you're a fan of the Edge Finder, or if you're a fan of these videos, then you may know that we used to actually display the GDP number, PMI number, retail sales numbers here. But what we've done instead is we've just displayed whether or not they missed or beat forecast, because what we've learned in doing a little bit of research and trading on our own is that it seems like whether or not the report was good or bad, what markets are really looking at is, did it meet expectations, did it beat expectations, or did it miss expectations? And that is what causes the biggest moves. If something beat expectations by a lot, if it was forecasted at something but it came out a lot higher, or it came out a lot lower than whatever the forecasted rate was, that is what the markets are reacting to. So we can actually see here that currency A, that would be the dollar because it's displayed first, and currency B, that would be the Swiss franc because it's displayed second. We can see whether or not they missed or beat their GDP expectations. So the US dollar missed GDP expectations, whereas the Swiss franc beat GDP expectations. And that is giving us that score of -2, because we are selling off the dollar based on that GDP news, and we are buying the Swiss franc based off that GDP news. So that's kind of how that works there. So we're trying this out. I hope that you guys enjoy this update. We think that it'll be a little bit quicker, so that you don't have to look at the numbers and look at the forecast and whatnot. You can just look right at this and know, all right, GDP, that was a miss from the US dollar. And in fact, if you want to get really in depth with GDP numbers, you can come in here and go to economic growth, GDP growth. We can take a look at US dollar. We can actually see that May 1st, when the GDP numbers came out, they were forecasted at 1.6. They came out at 1.3. So that was a missed forecast there. Whereas if we go to the Swiss franc, let's check this out, Swiss franc, they were forecasted at 0.3, but actually came out at 0.5. So there you go. That's how that works there. Let's see, Forex, here we go. And so we can see that this was a miss from the dollar, beat for the franc, miss on manufacturing PMI, and a beat on services PMI, whereas Swiss franc, we see the opposite. We see a beat here and a miss here. And then retail numbers for the US were missed, but beat for the Swiss franc. You can see that CPI here in the US right now met expectations at 3.4%. Same with the Swiss franc here. They met expectations at 1.4%. And actually, the unemployment rate came out in the US today. It was forecasted to go to 3.9%. It actually raised up to 4%. So there was a change. It was expected to stay the same at 3.9%, but it actually rose 0.1% up to 4% there today. So that was not very good for the dollar. So there we go. There is all the data and numbers backing up that -10 very bearish bias here on USD CHF. The other pair that we said we're going to take a look at, I believe, was CHF JPY, the Swiss yen cross. I think I've missed it. Where did it? Up, it's here at the very top. Swiss yen right now has a strong bullish score of a +8. COT data is a score of +2, and retail sentiment a score of +1. Taking a look at the COT data here. Now, the Swiss franc and the Japanese yen are our two most shorted pairs when it comes to institutional traders. However, the Swiss franc had a positive weekly change, whereas the Japanese yen had a negative weekly change. So that's why we're getting that +2 score there. Retail sentiment, on the other hand, 71% of retail traders are shorting the Swiss franc right now. That is giving us our +1 score. Our trend reading is a score of +1. And if we want to take a further look at that, we can go into price forecast, and I'm going to search up CHF JPY. And there we go. So yeah, we can see that this thing has been in a pretty clear and obvious uptrend ever since like May 27th or May 28th, the end of May. Pretty much every day this thing has moved a little bit higher, and we can see that from yesterday to today, that has also been the case. Price forecast predicts that that will continue to be the case as well. Finishing up with our fundamental data here, we can see that inflation, services PMI, retail sales, and unemployment rate are all 0 or neutral scores. GDP, manufacturing PMI, and employment change are all +2. Interest rates are a score of -1. And we can see here, remember, currency A here is the Swiss franc because it appears first in the pair, and B would be the Japanese yen, and it appears second here. So I'll zoom in and let you pause the video if you want to take a further in-depth look at what beat and what missed and what the score ended up being. But yeah, that is going to be the data and numbers backing up that +8 score, very bullish bias here on the Swiss yen pair. I hope you guys enjoyed the video. And remember, if you want the Edge Finder for yourself, you can find it down in the links in the description below, and you can actually get it for a discounted price if you use promo code A1YT at checkout. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.